We, folks, are in levitation mode, but most people are unaware of the levitation process. It's when certain stocks are anointed as winners and just go relentlessly higher, because there's always some money manager who wants more of that stock than can be had, more than can be bought at these levels. So they endlessly pay, no doubt, Jackie Wilson-like higher and higher. You don't get into levitation mode unless the market's already morphing from being a bear market to a bull market. And lots of big institutions are caught leaning the wrong way. They may have way too much cash. They may be too short. They may be stuck in all those silly ETFs, making sure that they're short as much as they are long. Either way, they're being run over by a Caterpillar bulldozer or a Union Pacific train.
All aboard!
Just flattened a bunch of pennies on a track when I was going to higher levels. The bears are the pennies. And that's how you get a day like today, where the Dow gained 383 points. The S&P jumped 1.33%. And guess this. Get the NASDAQ pole vaulted 1.99%. You know, I do a wild, visceral, uncensored program called The Home Stretch, a little after 2, every day with Jeff Marks, my CNBC Investing Club partner, where we take a no-prisoners attitude toward those who disagree with us. We take that tone because I don't think people understand just how drastically this market has changed in the last few months, and I'm trying to wake them up. Until late last fall, the market worked very differently. It worked something like this. It actually worked like yesterday in the afternoon. Someone somewhere deep in the bowels of the European Central Bank made some comment about how interest rates need to go higher, and immediately everything rolls over. I mean, it was just incredible. As it happened, the short sellers went wild. They're betting against all sorts of stocks that are up huge. Others were ringing the register furiously, all between 2:30 and 4, as if the bear was about to come and rip everybody's lungs out. The market slid right into the close, even as no one even really knew why they were selling. These sellers don't understand the new zeitgeist of this market. As I said on today's home stretch, this isn't just a story about the tape anymore. It's about how individual companies are doing. These are two radically different things. Yesterday's sellers were playing by the old bear market rules from last year. They think that every down day is a resumption of the sickening decline since the peak in late 2021. That's not unusual. That is how it works. That's textbook. They don't just have one foot in and one foot out. They have one foot out and there's a big toe in, but not the rest of the piggies. They're always waiting for the next 10% pullback. They're terrified every time the S&P 500 gets too close to the sun that is 4,200. They don't want to be involved with a market where some errant bear can come on air, say the rally is done, and suddenly we're headed back to the lows. They're playing from a place of fear, and that's rarely a good strategy. You must play from strength, not fear. You have to recognize that the tape isn't calling the tune here anymore. The individual companies are, and that's a much more positive piece of music, even as we head into earnings season. Sure, we can get some discouraging inflation data. We will. But that just means this market's going to take a breather and let you in, as it did this morning when some parts of the inflation number were good and some were just okay. So what do I actually mean by levitating? If you're taking your cue from the market's seemingly random day-to-day action, I think you're missing some of the greatest moves of our era. Levitation stock uno, number one, Meta Platforms, which just passed Nvidia today to become the best performing stock in the S&P 500 in 2023. Now, this is not last year's Meta, with willy-nilly Mark Zuckerberg wasting his time wearing some headset, bumping into things around his Hawaiian mansion. This is Zuckerberg getting religion on efficiency, firing people who aren't needed, and devoting his time to Reels, his TikTok killer, all the while trying to get more people to post on Instagram and spending a couple hours in the extraneous projects that he's wanted to do. If you're a smart money manager here, you don't worry that Meta's gotten too high or mock the ridiculousness of this whole move, as I hear so many people doing. You say, quote, this darn thing is a horse, and I want to get on this horse because you know what? We may be riding Secretariat. Younger people Google that. Then there's a levitation mover number two, Nvidia. Now, if you judge this one by last year's standard, Nvidia looks like the easiest short of all time. The stock's more than doubled since its lows last October. And if you think the bear's coming out of hibernation in a minute, this is the one you want to short in May and go away. But if you bet Nvidia, if you bet against it here, if you short it here, let me give you a little heads up. You're taking your life in your hands. Don't forget to send me an invite to your funeral. Hey, try to have it in May. I got a lot of plans for June. I'll be jammed up. I loved Nvidia for ages, which is why I renamed my rescue dog Everest after he passed. I then started and getting right into the new one. Yeah, that's right. Since Nvidia's gone, I'm now Ragu Nvidia. I can sneak Ragu into this building. Do you know that? I can go right in and see Jensen Huang with this. I mean, right in. I'm like in the headquarters, HQ. Of course, in the old market, in last year's market, owning anything heart and soul was like searching for Buffalo Bill without infrared night lights, or maybe getting your face ripped off by Hannibal Lecter. I stuck with it, though, because when the stock rebounded from its lows, I didn't think you'd have time to get back in, and you don't. Sure enough, Nvidia is now the definition of unstoppable. In this new market, you're studying news like news releases. One came out last night about the launch of the new high-end graphics card. Gamers can't afford not to buy it because it gives them more frames per second, which allows for smoother gameplay. All for just $599. You're going to crush anyone you play against. And keep in mind, even in the best of these consumer graphics chips are really just mid-range price for Nvidia. They're not the $10,000 cards you need to enable machine learning. The more $10,000 cards, by the way, the Murrier. That's M-E-R-R-E-R. I am conscious that I'm from Philadelphia, and make it sound like Murray, like the person's name. And there are many others in the same situation. You want to fight Tesla? You want to take the other side of the trade that is GE? To me, that's the financial equivalent of jumping in front of a speeding locomotive.
That was easy.
Or how about taking on Apple after it's been through the mill and back, where it's about to open 2 stores in India, and you're going to see lines zigzagging around New Delhi and Mumbai with makeshift tent cities built as people try to ensure they can just even get a glimpse of the iPhone 14. A glimpse! Yeah, that's a great short setup. Why don't I just short some Apple? All right. Of course, tomorrow we're going to have earnings, and that's going to be a bummer, right? We've already been told that they're going to be down 5 to 7%. All right, so now who knows that? I study like 500 companies. My life is completely miserable. I have a terrible situation, but I do know it's not going to be down 5 to 7%. I don't think a bull could script this moment better because bull markets thrive on low expectations. I finally expect. You know what I think? I'm going to tell you what's going to happen. The banks that we're going to hear from tomorrow, they will be pathetic parodies of the human mind. But even one of them, if one offers a coherent view of how it could possibly make money and doesn't need to offer a caveat that the world's coming to an end, by noon Saturday, that bank stock will be embraced too. All day today, I heard about how some analysts talking about selling in some months, then going away in other months, or going to some place. I don't know. I mean, sell in May and I don't know, go to New Zealand. What is that about? I wanted to say to that analyst, have you ever really come out of a bear market tightening cycle where the Fed's done? Have you ever? I want to ask him, do you remember what it was like trying to get back into the market after that second week of October in 1998? But then I realized something. The strategists who are talking, they were probably in feet pajamas when I said that. Maybe they were hanging up their hoodie in their cubbyhole. Maybe they were getting in line for the water fountain, coming off a vicious game of dodgeball in the playground. That might be terrific training for something, but it sure ain't for this market. Bottom line, as one winter after another goes into levitation mode, you need to realize that this is what stocks look like when we're transitioning from the bear to the bull. Sure, most people are still incredibly negative, if not everybody. But that's why you have an opportunity here. The best time to get into a bull market is when everybody's still bearish.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.